Hi everyone and welcome to the Panic Drop channel.
It's time to dive into another Bitcoin video as a lot has transpired throughout the week. Bitcoin has reached a new yearly high, so what can we expect next? In my previous video, I took a bearish stance in the short term and anticipated a weekly correction for Bitcoin extending into late June. Consequently, I reduced all my short-term positions and placed buy orders in the 23k to 22k range. Bitcoin dropped around 20%, but unfortunately, Bitcoin did not reach those levels and instead surpassed the May swing high. The upward movement occurred slightly earlier than expected due to significant fundamental developments. The sudden influx of ETF applications and institutional finance approval sent a clear message to the market. After years of denials, this green light signifies a significant shift in sentiment. A significant surge in Bitcoin dominance, accompanied by a relative weaker response from other altcoins, is an exceptional bullish indicator. The reason behind reducing my trade positions was to safeguard the portfolio against this downward move to the lower 20s. With the break of the descending trendline and May swing high, it is evident that the weekly higher low has been formed here. As a position trader, my approach is to follow trends and expose myself to long-term and mid-term movements as much as possible. This implies that it's not always feasible to perfectly time tops and bottoms. To ride a trend, you need to give it room to pull back and understand the inherent volatility of an asset like Bitcoin. So, confirmation is key. When Bitcoin broke 26k, I decreased my trade positions in preparation for a potential pullback. This move aimed to hedge against a massive decline and seized an opportunity to acquire positions. Although that scenario didn't fully materialize, I re-entered the market with half of my trade positions once Bitcoin broke the May swing high. Once the weekly candle closes above the May high, I will open the remaining positions. Currently, Bitcoin has experienced a strong upward movement, which indicates short-term overbought conditions. It's reasonable to expect resistance in the 30k to 31k range in the short term. However, in the intermediate time frame, I no longer hold a bearish view. It appears that a bullish continuation is on the horizon with momentum building to push prices higher. Could Bitcoin retrace back to the 20k level? Certainly it's possible, but if you haven't obtained the exposure you desire during the early stages of a 4-year cycle, waiting for a pullback may not be a prudent choice. It's uncertain whether the market will provide this opportunity. If bullish momentum persists with a similar surge to this week, before you know it, we could find ourselves in the 35k range, leaving you uncertain about your next move. If you're wondering whether you should add to your positions, the answer is yes. However, it ultimately comes down to finding a comfortable position while understanding the significant volatility inherent in Bitcoin. You should prepare yourself mentally for 5 to 10% swings within an uptrend. If Bitcoin were to collapse at this point, it would raise concerns. It shouldn't ideally drop back to the 25k range because that would indicate the market is still in a declining phase, potentially leading to much lower prices. Currently, I don't see any signs pointing to such a scenario, but we must remain cautious and consider all potential outcomes. Taking a broader view, it's evident that we are still in the early stages of the 4-year cycle. We are currently in the 7th month, and the entire cycle typically spans around 47 months. The market's peak is at least 2 years away, underscoring the importance of establishing your fully allocation. Many investors make the mistake of buying little bits of Bitcoin in at the bottom, fearing further decline. However, every time the price surges, they increase their investments. Consequently, they end up investing their life savings at the top, assuming it will continue to rise. In reality, the approach should be the opposite. We should aim to have our full allocation position ready at the bottom of the market. While it's still possible to buy during an upward trend, the purchases should be at much lower levels compared to initial investment made at the bottom. By adopting this strategy, we can mitigate the risk of entering the market at its peak and potentially suffering huge losses. It's crucial to have a long term perspective and avoid getting caught up in the FOMO mentally that often drives investors to make irrational decisions.
That's it for today. Thank you for watching. I hope you found this content helpful. If you enjoyed it, don't forget to like and subscribe to stay tuned for more videos like this. Take care and have a great day. Bye bye.